Hi everyone, today we did get a kind of panic sell-off here, went quite a bit lower early in the session, recouped nearly all of that, but now we have this kind of structure to work with. Let's take a look at all of the charts and see where we're going for tomorrow. Just a quick reminder, hopefully I am going to this school tomorrow for about a month and then I'll be back online once that is completed. So this will be the last one for about a month. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got the Fed minutes. The Fed is divided over tariffs. They see more inflation coming. They also see a weakening labor market as the minutes show, which is kind of what we thought, but this is more reinforcement that there are concerns about the economy. There are concerns about inflation. Are we going to be stuck in this kind of stagflationary environment where we can't cut rates because tariffs are pushing up prices over the next couple months, but also we are seeing a slowing economy, partially because of tariffs, partially because we've been growing for so long that it's time for a little bit of a pullback in the economy. And there are still some Fed members that say 4.25% to 4.5% is where we need to be for the target rate. You got some saying that we need to cut. Markets believe we're going to cut, but right now we're still on pause. This last inflation read was good for CPI, but the PPI was quite terrible. Is that going to cause them to pause? And then of course we have Jackson Hole here where FedPal is speaking on Friday, and I'm sure he will be asked about these minutes at least a little bit more. So I would say this adds uncertainty to markets, which is partially why we had the market today that we had. Looking at fear and greed, we are stepping back down to a 56 from a 60 here. We had kind of a peak zone in here. We tried to rally back up, back into greed, and now we are moving back towards that neutral line. We're right on the cusp there. Momentum, neutral, strength, still in greed, but breadth pulling back into neutral. Want to see what that did today. Yesterday was up, even though markets were down, which was a little bit odd, but put call ratio stepping up as you would expect, volatility stepping up as you would suspect, and then safe haven demand all the way into fear already. Junk bond demand stepping up just a little bit here on that spread. Moving over to the Fed futures here just for a moment, you can see the current probabilities of a cut's around 80%. That is down just a smidgen here, but that is because it's going down to a potential for 2 cuts now for September. That is just not going to happen. I don't believe that's going to happen at all. And honestly, I think markets are probably a little bit out of their wits here on the Fed futures. I don't really believe that they're going to cut in September. I think it's going to be more of a 50-50 split at best. But right now, markets believe 80% chance or so of a cut in September. And then back-to-back cuts is about a 50-50 split now between 4 to 4.25 and 3.75 to 4. So back-to-back cuts September, October. I think that is optimistic, and then we'll see this eventually right itself, and markets are not going to like it very much. Moving over to the charts, looking at the S&P is down only a quarter on the day, but it was a lot more panicky here early in the session. You can see we were down about 1%, got below the 21, below VWAP there, and now you have to start looking at this as a potential left shoulder head, right shoulder potentially. So that could take a long time to culminate. I think this will likely continue to fall to this kind of neckline area around 625.90. You could argue maybe that neckline's a little bit lower. We fall to that 55 EMA around 620, but if this starts to left shoulder head, right shoulder somewhere in kind of mid-September time period, then we could see a much more dramatic fall over the next couple of months, somewhere from that neckline down to probably here, I would suspect, at a minimum around 4% lower. This head and shoulders is not very deep, which does kind of limit your chances of kind of a follow through there, but you got the 200 sitting all the way down at 590 or so. If we were to fall from here to that 200, that would be about a 7.5% move. I think that is not out of the realm of possibility. You also got the 144 EMA sitting right in that same area. So as a zone of support, it seems like this could be the area if this culminates as a head and shoulders pattern. And then looking at that hourly chart, we added some structure to it here today with that second leg down. So now this is what we're looking at. Are we rejecting off of this structure? Right now, it does kind of look like we are in the after hours. If we do get that follow through to that lowest band, that's going to be about 1.25% or so to that next area. Price target would be around the 630 area in the short term. Moving over to the Tasty charts here, you can see we hit that 55 EMA EMA almost to the penny there on the 4-hour chart right here around that 635 area. Candle close, candle open, bounce to that 9 EMA on the 4-hour chart and that 21 EMA in that same area here between kind of 639 or so, right in that 639 area, hitting that zone of resistance. Got a little extended, which is why we saw such a powerful bounce here on the 4-hour chart, but you're in bearish conditions now. Saw that flip to bearish conditions, and I would suspect this is likely to fall over the next couple days. It'll slow just a little because of that lowest ATR band already being there around 635, but then we'll get that reacceleration of about 1.25% like we talked about. Then looking at that hourly chart, clean move to the middle of the range after being extended makes sense. Middle of the range rejection, perfect move there, and then that lowest ATR band 633.40 as the next zone. So suspect this is going to get the continuation lower tomorrow. Moving over to the NASDAQ, same kind of thesis, down only 0.5%, but much worse at the lows of the session, about 1.75%, almost 2% there. Ended up coming right back to the level on a closing basis. On the hourly here, you can see this is a retest from the underside of that level 566. On the daily chart, it looks like you're kind of holding the structure if you just tweak this level just a little bit. But for me, this is a breakdown retest. You would expect a continuation breakdown from there. Momentum bearish, huge volume on the session coming through, and you can see on the hourly big volume immediately on that selling pressure. So I would expect that to be selling volume. Structurally, you have the same kind of setup, right? You have a left shoulder, you got a head here. Are we going to kind of come into this area, maybe just a little bit lower, 553 in this area, and then you get a right shoulder in here towards the middle of September, and then you're starting to look for that bigger breakdown towards the 200 around 515 or so. That would take you about 8, almost 9% lower, give you a nice little opportunity, and then we'll see what happens from there. I wouldn't expect to go too much lower from there. I don't really believe that we're going to see a major bear market turning point here, but it's been a big run. Is it time for at least a 10% pullback? I could absolutely see that being the case. Then giving this just a little bit of structure here on the hourly chart, I marked this kind of midline here, put it on the top and the bottoms. If you reject from this kind of midpoint here to that next trend, that would be about 1.5% and give you that 557.29 area as your target, and then a pullback, and then a slight rally into here, and then we'll see, do you get that neckline bounce into the right shoulder over the next couple of weeks? I think that's probably the most likely case. You can see it here, left shoulder, head, right shoulder potentially. So we'll see. That is what it looks like to me though. Moving over to the NASDAQ, this has been bearish conditions since back here around the 14th, and we are getting that continuation here. This is starting to look more and more like a trend in the short term. Trailing stop right now, 568.92. You had a big step down with the leg down and then flat line here over the past couple of candles on the hourly chart, 568.92. And then looking at that 4-hour chart, of course, bearish conditions yesterday, and then that trailing stop right now, 576 on the 4-hour chart. Very extended, hit that 144 EMA on the 4-hour, getting a little bit of a bounce from there. Still right at that lowest ATR band, not much of a pullback at all here on the 4-hour. So wouldn't shock me to maybe see just a little bit more upside, and then that bigger continuation down to this kind of neckline area around 555 or so in here, but patterns can be a little bit hard that way. You do have some structural zones that are holding as support in the very short term. Moving over to the Russell, same thesis as everything else. Ended up down only 1/3, but was down much more on the session. Momentum stepping to bearish, RSI stepping towards bearish. 21 EMA was your support zone around 223.42. Is this going to hold in here? Does this have that same kind of structural pattern? Kind of, right? You got a left shoulder, maybe a head here. This structurally doesn't look as clean as the other ones, but if that's the case, you got plenty of room down probably to 218, maybe even lower, 216, somewhere in here, and then you get a right shoulder. And then looking at the Dow, very different thesis. Basically no correlation with markets right now, unchanged on the day through very small wicks in both directions. Momentum slightly bearish there, but we're sitting right at all-time highs, very little movement on the Dow. Moving over to the Mag 7. Mag 7 did the same as everything else, except it stayed down 1%. It was down right to that level, about 2.5% to 337.79. Touched that level almost to the penny and then bounced here. Momentum still bearish, volume ramping over the last 3 candles as that sell accelerated. This is not a topping pattern here for the Mag 7. This is just an initial dip. Are we going to get a double top or a lower high structure? But for now, this is still just a pullback on the Mag 7. Need to see something more of a pattern to say this is going to turn, or is this just going to be a pullback and a continuation back up to this kind of 370 area sometime in September. Moving over to Apple and Microsoft. Apple was down 2% and it closed on the low, and it's continuing to sell here to that next level, 224.36. Once 230 broke over the last 3 days, we were testing that. Once it broke, it continued pretty much right to that next level. I do think it'll go probably another $1 or so. Then look at Microsoft. Broke through this trend line yesterday, broke through the level here. 55 EMA is your next support at 590 cents. Momentum bearish, RSI still bearish. Got some trend support in here around 499, right in that 500 area. So again, I would suspect these are likely to go a little bit lower. Do they go down immediately? Hard to say, but I do think that they will eventually. Moving over to Tesla and NVIDIA. Tesla went all the way to that 313.80 area. Really interesting. After the trendline break yesterday, we were concerned, retested the trend line and sold. Cut through 324 briefly. We closed pretty much on it here, but 313 is your support. Could go all the way down to 302 before this kind of find some bounce, but momentum bearish, RSI bearish. You could still argue low, higher, low, higher, low, high, higher, high structure. So there are still some buyers in here for Tesla, but you really have to play the levels. And right now it is below 324. So that's bearish. And then looking at NVIDIA, same thesis as everything else, went down about almost 4%. Looking at that 55 EMA as support 163.48, but we broke that level yesterday aggressively, did get a slight continuation. Is this the start of a topping pattern? That's what we have to keep watching. Moving over to staples and discretionaries. This is continuing to show really clear rotation. Staples finding buys up 0.5%, got to that next level, did reject from there a little bit, but seems like this has a clean breakout. Momentum bullish, RSI bullish, looks really clean. And on the back of that, you got discretionaries down 1%, hitting the trend, hitting support at 227. Momentum bearish, RSI a little bit bearish. So we'll see, but this is definitely flashing a warning sign, clear divergence between these two. Moving over to breadth. Breadth did continue to go higher, which is crazy considering what we're seeing across markets. Markets are broadening in their rally, but the Mag 7 is so heavy and failing, and that is why we are seeing markets go down here. Momentum bullish, RSI bullish. Is this going to hold up markets? Is this a short-term pullback in a broader topping pattern? It still seems like it is. Moving over to the dollar. Dollar did continue to a higher high and a higher low structure here. It is fading just a little bit off the 21. Want to see it hold this structure and push towards that 99.83 area. Is this going to be kind of sideways choppy nothingness? Certainly a possibility, and it's looking a little bit more likely here, but you still have the structure of bullishness, needs to continue to do that. Again, looking for that next zone, and realistically somewhere in here, 101 to 102 is the hope. Moving over to bonds. Bonds did pull back, a little bit of risk off there with J&K, and then TLT, that risk on move. 2 days of bullishness, still stuck at the trend line. Suspected that was going to be a zone of resistance here, and sure enough, we hit it today. Can we push through there, get back into bullish conditions above the trend, above some of these zones of resistance around kind of 88 to this kind of 88.50 area? Needs to get above there. Structurally, this is still bullish for me, still a nice base. And I do believe it will go higher, but again, risk off here with J&K moving lower and risk off here with TLT moving higher. Moving over to my accounts, I didn't do much of anything today. I'm working on getting ready for my school. I did take off those positions early in the session, lost a little bit on those Russell puts, leaving on this dollar position, see what it looks like when I come back. But for now, not doing much of anything. I'll probably buy some bonds in this account just to let it sit for the next 30 days or so, but otherwise no positions as I head out for the month. Let me know down in the comment section what you think of the Fed minutes. Are the Fed futures correct? Are we going to get cuts in September after we went to basically 100% chance of no cuts, and now we're back to almost 100% chance of some cuts and back-to-back cuts even maybe? Let me know what you think is going to happen down in the comments. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes, of course. None of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.